And we're live.
I feel the connection. I really feel it. Feel very connected with our audience today. It's the first, I think this is the first Wednesday Instagram Live that we've done. Is that correct to say?
Yeah, first Wednesday, last one of the year. I mean, we started it this year, right? So
it's the last Wednesday of the year and the first Wednesday that we've done Instagram Live. So it's the first and the last of something.
And I think it's also cool, right? Like it's coming, I wouldn't say like full circle, right? We're going to continue these, but the fact that we started it this year, we've continued it. This is our 16th Instagram Live. And I think it's been awesome. It's been a great way to connect with our audience, with you guys, give you guys a little bit more insight into who we are, but also like what we're doing, how we operate, our mindset, our mentality, and kind of make it a little bit more personal, and then allow you guys to ask questions, open up. And then this was, what we're talking about today is something that I think it was your brother when he was one.
It was that day with Dental Group. It was the company.
Yeah, beautiful. He was like, hey, so how do you guys minimize risk? So now we're like, well, let's talk about that, especially because it's so important. So I think it is really cool where we're at today with our Instagram Lives, with our webinars, and being able to connect with everybody. So
and the Instagram Live, while Maxx gets comfortable.
Please.
I believe our first Instagram Live was done in March, right at the onset of the pandemic, and if I recall correctly, which I probably don't, but if I do recall correctly, it was something along the lines of, we realized that this was a hard time for people to interact. It's not the time when people were coming into the office and where we can meet with our investors and have coffee with the brokers that we have relationships with. And it was very tough, especially the first couple months of adjusting to this new world where thankfully we, if this pandemic were to happen at any point in time, thankfully it's 2020 and not, 1950, because now we have all these technologies where we can interact with people virtually. And I think that a big part of why we started doing these Instagram Lives, in addition to trying to be cool, was because of the pandemic and because of how difficult it was to interact with people in person. So I know we've kind of talked about silver linings and how necessity is the mother of invention, but we're going to talk more about what we've accomplished over 2020, what we're looking forward to in 2021. But first we will answer Baywood Dental Group's question about analyzing and minimizing risk in our investments.
For sure. And this was a question last time. If you get our emails, you can go back and watch the video that we did last time. We talked about investor and operator relationships, and one of the things we talked about is that most operators, right, most companies that are allowing people to invest with them, to buy and own real estate, talk about, well, this is how much money I'm going to make you. Look at this, look at that, look how great it is, and that's, hey, it's nice, it's the sexy part of real estate, but the truth is not every deal goes according to plan. Not everything is executed with the intention or what was on set. So the big thing for us, hey, we can talk about upside potential, we can talk about how we're making 15, 18, 25, 30, 60%, not the 60%, but like, right, hey, we can make you 12, 15% annualized returns, but really, what happens if we're not able to?
What happens if there's a pandemic, right? So I think one of the first videos that we made, we were walking, we had inspected a building in West Hollywood. And
that's true.
And we talked about the way that we analyze deals is we look at our worst case scenario. Now, what is worst case scenario? I mean, worst case scenario is, California sinks and there's no more California, and it doesn't matter what real estate holdings you had if we're all dead, God forbid. But I'm just saying, we look at worst case scenario within a reasonable frame of mind. So it means looking at economic factors, looking at the market, understanding, well, if interest rates are at an all-time low and we plan on exiting an investment in 2.5 years, so can we bank on the fact that interest rates are going to stay as low as they are now, right? And the answer for us is no. We're going to bake in some assumption that interest rates are going to jump up 50 or 100 bips by the time that we're ready to exit the investment, and the cap rate is going to adjust accordingly. I know it's maybe sixth grade instead of third grade that we're used to, but essentially we try to figure out within reason, where do we think we can protect our investors? Can we protect our own investments and work our way backwards from the worst case scenario?
Absolutely. And so I think kind of what you're talking about is that we have to establish what the risks are. If you want to minimize risk, well, what is the risk? And a lot of the things that you're talking about are the risks that we take into account. And the biggest thing for us is that every model, every projection is an assumption. And for us, we'd rather be super aggressive in how we operate as a business, but very conservative in our modeling, in our projections. So one of the ways that we minimize risk is, well, here's our assumptions, here are our projections. Let's bake in 10, 15, 20% conservatism into those so that if the market shifts downward, we're still covered within the additional, margin that we've baked into where we're buying the property, where rents are going, what our exit projections are, right? So if we're buying in a market that's historically a 14 GRM exit, we may be at a 13.5 GRM instead, so that if the market does shift down, well, maybe now it's at 13.5, or maybe it's at 13.7, 13.8, whatever it is. So, we try to be very conservative in our assumptions to minimize risk. And we also look at, well, what's our downside? Is, if we have to own the building, right? If you're buying a building that's currently at market rents, well, what happens if those rents drop 10%? For us, we buy underperforming assets that have been neglected by long-term owners. So we're saying, well, day one is most likely our worst case scenario, right? The building hopefully doesn't sink, doesn't fall down, but is not going to be in worse condition. The income's probably not going to be any lower than today. So where are we at day one? What's our cash on cash? And for us, this is our worst case scenario. We never want to lose money. So day one, we want to be, net even or net positive day one.
Yeah, I think just to add to that, one of the scariest things in life is not knowing the worst case scenario, not knowing what is the worst case if I do X, Y, or Z. And it doesn't just apply to real estate or investments. It's like, if I go here, if I don't go, like the whole idea of FOMO, right? Like everything is about what's the worst case, right? And if you don't know the worst case, things are actually scarier, right? If you don't even know what the worst case is, then it's scarier to jump into whatever this venture or activity may be. So what we try to do is we try to look at the worst case and get comfortable with it. If we can get comfortable with the worst case, then we move on to the next step. If we can't get comfortable with the worst case scenario, then we pass on the deal or we lower our pricing in order to get comfortable with that worst case scenario. So I hope that added some value to how we look at minimizing risk. If anyone has any thoughts on how to minimize risk that they can share with us, we'd be glad and appreciative to hear from you on that. To get to the next chapter of this Instagram Live, we're going to talk about what we've accomplished in 2020. It's definitely been the most interesting year that most of us have. Definitely a very interesting year for everyone on planet Earth, probably, just with coronavirus, and who would have predicted a pandemic. And even though it was going on in China, we were joking around about, not us, but people were joking around about it in January, and no one was really talking about it coming to LA until it did, and then it turned, and then we thought it was going to be shorter lived, and now now there's a vaccine out there, so there's been so much that's gone on. We'll talk to you about some of our thoughts and our accomplishments in 2020, and then we'll get into what we plan on doing and what our goals are for 2021.
Yeah, for sure. And before we jump into the Goldfinger group, obviously, we can talk about 2020 as what's going on in the world, how we've become more digital, but I think a lot of people are hearing a lot of that in the news and have a good sense of what's going on the interpersonal. So we've done a really good job as a company navigating that. We've moved to a new office, had more space, been able to separate. We've done a really good job with all our tech and being more on Google Drive and being able to share things because, hey, people may not be in the office as frequently. I know from March until it was probably like June, I think nobody was in the office.
Well, I was in the office.
Okay, you were in the office.
I was sleeping in the office.
So, we've done a good job as a company, the 6 people that are here on a regular basis, navigating this, and we've really grown into what's going on and been able to continue operating on a day-to-day so that we can continue our business, continue buying properties, repositioning assets, and selling them and performing for our investors. So that's number one. This year, I'm looking at it, we did 11 transactions, 9 acquisitions, 2 dispositions. I think there was a weird period, right? Like the market kind of shut down. And I think we talked about this, like in March, April, buyers were basically saying, I don't want to buy. Like the world may be over tomorrow, it may be over in a month, it could never be, like who knows what's going to happen. So we actually saw like a freeze. So the fact that we still averaged basically a deal a month, we did 11 transactions this year, is pretty outstanding, by my standard. I don't know to your standard, but I'm pretty proud that we were able to continue doing what we were doing and building off of last year, where a lot of people weren't able to, right? They had to pull back.
Mm-hmm.
That you were telling me before, like you were talking to a broker who had owners that sold at a loss because they had to.
Mm-hmm.
And for us, the fact that we're able to continue moving forward and making money and operating day to day is pretty phenomenal.
Yeah, I have to look at the dates on our closings, but I think the bulk of our transactions of the 11, I'd probably say, probably 7 or 8 of them happened within the last 3 months.
Mm-hmm. Today was one.
Today was one. Last week there was one. The week before there was one.
Mm-hmm.
So that's 3 already. In December there was one more, I think, in the first week of December. So I think I think 4
in December.
Yeah, 4 in December.
We were supposed to have a 5th that got pushed to January.
Exactly. So and we have another sale in January coming up. So we've been busy over the past couple months, but there definitely was a period between mid-March to probably July that it wasn't just like the Goldfinger Group is not looking at buying deals. We actually did close on a purchase in Beverly Grove during that period, but
we bought and sold the East LA portfolio.
That's right, we bought and sold the East LA portfolio. So we were definitely active, but we weren't able to be as active as we would like to have been in a normal year. I think in a normal year, instead of 11 deals, we probably would have done 16, 17 deals. But adjusting for that 4 or so month period where we, to no fault of our own, but basically due to COVID and due to the market slowdown and shutdown, etc., we weren't able to be as active as we would have liked to have been. And what we're going to do is we're going to make up for that lost time moving forward. Like we said, 4 closings in December. We have 2 closings lined up in January, and we're constantly looking at new deals to hopefully purchase. And we're working really hard on repositioning a lot of the buildings that we currently own. And
we have 8 under construction, 8 properties that are being rehabbed today. So we actually. One of them, we're leasing out now. It's awesome. We've leased out 5 of the 8 renovated. The 9th is under construction. Will be done in a couple of weeks. So it's cool to kind of see the process and talk to our investors about, hey, we bought this building a year ago. Now it's being leased up. Hey, we're getting ready to sell it, potentially refinance, pull out equity, and go buy another deal. So it's really cool to see the full life cycle of it. And have our investors alongside us, throughout the process.
And just to mention on that, to lease out, studios in Pico Union with no washer dryers in the units, but with a nice renovation done for $13.50 a month, right, in December. Right, during COVID, yeah. Right. And I personally believe that the leasing market is going to heat up after the holidays. I think, between the vaccine. The new year kind of feels somewhat like a fresh start. And I think also there's been a lot of young folk who have been living at home with their parents for the past 6 months or so. And, holidays come around, more time with family, and it's kind of starting to feel like, itching to move back to the city. So I think once things start hopefully opening up, the vaccine has given tremendous confidence to a lot of people. And things are going to open back up within the next couple months, and hopefully that'll bring a lot more people back to the urban core of Los Angeles, and it kind of works out timing-wise for a lot of our construction projects that are wrapping up and finishing and going to be ready for lease up in the next 3 to 6 months. And we're excited for that. We're excited for the vaccine to hopefully save a lot more lives, and we have really ambitious goals going into 2021.
Yeah, I definitely, and you said it best, is like to continue building on what we've done. And I think that and I think you just used this word, like we're very ambitious, right? We're very conservative. We stick to what we know, and we don't push the envelope just to make deals happen. But we're really trying to grow the Goldfinger group. We're getting ready to bring on 2 new people. Bring us to 8 employees. We're looking to do more deals, bigger deals, right? We're closing the second half of a portfolio in January. We're selling an asset in January. We're going to have exchange funds, right? Like we're really trying to push the Goldfinger group to higher levels than where we're at today. Because I'll speak for myself. I don't want to speak for you. I'm happy where we're at. I think it's amazing what we're doing and what we've done over the past. We've been together 3 years almost. But I'm definitely not satisfied. And I see 2021 as a year that I look back at what we've done, and there's no reason why we shouldn't be doing more.
I just want to say I'm satisfied to hear that you're not satisfied, because I'm in complete agreement with you that we have a long way to go, and I really enjoy coming into work every day, and we are blessed to work with some of the greatest people that I've ever worked with. And I've worked with a lot of people over the years, and I feel really blessed that we have great talent at our company, and our staff, from the administrative, the marketing side, the acquisition side, the asset management side. We really are fortunate in this business to be able to work with people who we can choose to work with and who we like. And that's so important and such a blessing to be able to work with such great people. And so we are looking to bring on 2 additional people, one in the role of asset management, the other one an acquisitions associate to help bring deals to the table and deal also with investor relations. The asset management role is really in terms of repositioning the buildings that we buy, so dealing with construction and leasing and a lot of higher level administrative, legal, accounting, financials, and those kinds of things. So if you know anyone, or if you are watching at home in Chattanooga and want a job in LA, and we'd be delighted to speak with you. And I want to say that for 2021, to sum up, the goals for the Goldfinger Group is to continuing having a positive impact on the people and communities around us, and the people and communities that we're fortunate to work with. To serve our investors, to have mutually beneficial relationships with our investors and the brokers that we do deals with, the mortgage brokers, the lenders that we work with, to continue building. And I think the focal point in terms of our growth is really looking at bigger deals.
Yeah.
Bigger deals is if we can do another 11 deals this year, but they can be 3 or 4 times the size of the deals that we did this year, I'd be very happy. And I'd much rather do that than do twice as many deals but the same size. I'd rather do 3 or 4 times as many deals but make them much bigger. I don't know if what I just said makes sense.
I don't know. Don't ask me.
But we're trying to get into bigger deals, and with a mind like this, who knows? But that's why we got this guy.
Exactly. Well, thank you guys so much for joining. It's been an awesome year. We're excited to move into next year. Happy New Year.
Happy New Year.
Cheers. We'll talk to you in 2021.
There's been, what was this, vodka? What did you put in here?
Yeah, just a splash.
A splash. Terrific. Thank you guys for watching, and to the gals out there.